Hi everyone, Assalamualaikum and good morning. I'm Puan Marshita binti Hashim from Faculty of Accountancy UITM. Now let's move to the second parts of the courses. Let's look at accounting equation and classifications. After completing these parts, you should be able to understand basic accounting and expanded accounting equations, and then you should be able to explain accounting classifications. Okay, basic equations equivalent to assets. Okay, basic equation consists of assets equivalent to honest equity plus liabilities. Alright, so how to calculate honest equity? Honest equity equivalent to capital plus net profit minus drawings. So these equations actually we can expand. Alright, this is basic equations. We can expand into expanded accounting equations, whereby net profit we can calculate by deducting revenue from expenses. Okay, so if we expand, it become like this one. Right, net profits equivalent to revenue minus expenses. Okay, so now your assets equivalent to capital plus net profit minus drawing plus liability, and then assets equivalent to capital plus revenue minus expenses minus drawing and plus liability. Okay, let's look at first illustrations. Right, let's say Miss Lofa starts business with 10,000 cash. So how to record how does this transaction affects basic accounting equations? Okay, so based on this transaction, asset will increase by 10,000, and then capital also will increase by 10,000. So based on our basic equation just now, okay, assets will increase by 10,000. Capital under honest equity will also increase by 10,000. Therefore, your left and right side balance. Alright, so if you expand on your accounting equations, both sides still balance, whereby your asset, in this case, cash increase. Okay, your cash increase 10,000, and then your capital, okay, under honest equity, your capital also increased by 10,000. Okay, now let's look at second illustrations. Let's say the business bank in cash into bank accounts. So when you bank in cash into bank accounts, that means your cash account reduce or decrease, but bank account increase. Both cash and bank accounts are example of assets. That means only assets increase by 10,000 and they also decrease by 10,000. That means there is no change in both sides. Okay, no effects on the other sides. Okay, now let's look at illustration 3. The business bought office furniture on credit from Bahagia Enterprise, amounted 2,500. So what's the effect on our basic accounting equation? Okay, here asset will increase by 2,005 since we bought furniture on credit. Therefore, our liability also will increase by the same amount. Alright, so our asset will increase. This is your asset increase by 2,005. Liability also increased by 2,500. That means our debit and credit side, or left and right side, still balance. Okay, now let's move to accounting classifications. Alright, based on our equation just now, assets equals to honest equity plus liabilities. Now, assets actually consists of two types. Okay, it can be current assets or non-current assets. Asset refers to properties owned by the business. Basically, there are two types of assets, which is non-current asset and current assets. Okay, the non-current assets are those assets acquired or bought and not for resale. So the business will use them in running the business. Non-current asset has useful life of more than 1 year, And non-current assets are divided into three types. It can be tangible, intangible, or investment. And then on the other hand, current asset refers to either cash or those assets that are expected to be converted into cash within 1 year. For example, inventories, okay, account receivable. Our customer owe us, okay, we sell goods on credit, and then customer have to pay. We give them, let's say, terms of payment less than 12 months period, so it becomes current assets. And then cash at bank or cash in hand. Okay, next regarding capital and honest equity. Just now remember, honest equity consists of capital, net profits, and also drawings. Okay, so how to calculate net profit? Revenues plus expenses. Okay, so capital is the amount contributed by the owner in order to start the business. It can be in the form of cash or non-cash item. For example, if we bring into the business a 10,000 cash, then that means it involves cash. But sometimes we can also bring into the business our old motor vehicles. Okay, so we bring a capital in terms of motor vehicles. So increase in capital will result in an increase in honest equity. So when your capital increase, honest equity also will increase. Okay, now net profit equivalent to revenue minus expenses. So when your net profit increase, definitely honest equity also will increase. But if there is net loss, that means your honest equity will decrease. So what is revenue and expenses? Revenue are the income received in our daily operations. Trading business normally derive their revenue from the sale of goods, and service business derive their revenue from performance of services. Okay, and then expenses are cost of assets consumed or service used in the process of earning revenue. It is incurred in running the business daily operations. That means there is no long-term benefit that will be obtained in the future. For example, purchase of goods. You pay salary to your workers, and then interest expense on loan that you apply before, and then rent for your factory, for example. And then the last one is regarding drawings. Under honest equity, we have elements of drawings. Drawing refers to transaction made by the owner for personal use. It can be in the form of goods or cash or others. Okay, for example, owner bought stationery by cash, 100 ringgit for personal use. So this transaction will decrease asset and increase drawings. Okay, next regarding liabilities, we have basically two types of liabilities, current and non-current liabilities. Liabilities are financial obligations of the business to external parties. Okay, so non-current liabilities refers to amount owing by business that is not expected to be repaid in 1 year. For example, long-term loan, mortgage on premises, debentures. And then current liabilities normally we expect to be repaid within 1 year's period. For example, short-term loan, bank overdraft, account receivable, accounts payable, and also accrued expenses. Okay, now let's look at first exercise. The assets of a furniture shop is 550,000 and the capital of the owner is 200,000. What would be the liabilities of this furniture shop? Okay, so based on our accounting equation, we calculate liabilities. Alright, based on basic equation just now, assets equals to owner's equity plus liability. So asset 550,000. Okay, this is your assets, your furniture. Furniture is example of your assets. So your asset valued 550,000, and then capital. Okay, under honest equity, remember just now we have capital plus net profit, and we minus drawings. So now capital is 200,000. So how much is your liability? So to calculate liability, Okay, liability equivalent to asset minus owner's equity. So your asset is 550,000 minus 200,000. Therefore, asset equivalent liabilities equivalent to 350,000. Okay, liabilities equivalent to 350,000. Okay, now let's look at exercise 2. Okay, calculate the value for the missing items below. Okay, the first one they give us asset 45,000, liabilities 12,400. So how to calculate capital? Remember our basic equation, asset equals to owner's equity. Okay, owner's equity plus liability. Remember under owner's equity we have liability. Now if they give you asset and liability, how to identify your capital? Capital means asset you minus liability, you will get value for capital. And then for second, okay, second missing figure, asset equivalent to capital 33,000, you plus liability 13,333. Alright, the third one, missing figure number 3, asset minus capital, you will get value for third missing figure. And then missing figure number 4, okay, missing figure number 4, asset 45,678 minus 34,567. And then missing figure number 5, okay, capital you plus liability, you will get the figure. Missing figure number 6, alright, missing figure number 6, assets you minus capital, you will get missing figure number 6. Okay, you can try and you can check your answer on your own. That's all. Bye. Assalamualaikum.